Hi traders, welcome to the new weekly forecast for the trading week beginning on January 13th. Now, as we are entering into the new trading week, I believe that market volume will gradually pick up and it will present the right kind of volatility and liquidity to play in the forex market. In the previous week, US had announced NFP numbers and they remained stronger. So technically and fundamentally, dollar is looking stronger to me. So let's dive into the charts and find the new trading opportunities in the coming week. So before we begin with our chart analysis for the coming week, I want to go through the economic calendar. Now tomorrow on Monday, January 13th, there is a holiday in Japan. So market will not get substantial volume related to Japanese yen pairs, and followed by PPI, CPI, core CPI. So most of the new announcements are related to inflation in the coming week. We have GDP announcement coming from UK market on January 16th and followed by initial jobless claims, that is the weekly jobless report from the US market. And on Friday we'll have Chinese yuan, so basically China releasing their GDP report, followed by European CPI report. So now let's go to the trading view and open the chart. So our first instrument is dollar index. So here I've already marked multiple fib extensions starting from the higher time frame, and as I was said in the introduction that dollar is still looking very strong to me. Now currently I'm on the monthly chart, and if you notice, histogram is rising here, MACD histogram, and price is also rising. So I cannot apply another extension on monthly time frame. So I have marked a vertical line here to find the lowest point nearest on the chart. So this is the monthly lowest point on which we are going to apply fib extension moving to the lower time frame. Now from monthly I'll dive to weekly, and even on weekly there is no scope, there is no probability to apply the fib extension, and I'll tell you the reason here. We have the established lowest point here on the weekly chart, but I do not have an established high. So ABC pattern cannot be applied on weekly. Now I need to move down to daily to apply ABC pattern here. Now this is the entry of buyers on daily chart, lowest point. Then this is the first high, and this is the next higher low, which corresponds to MACD histogram. So I'm going to use these 3 points and apply fib extension on the daily chart. I need to select fib extension and apply from the lowest to the first high and higher low. So currently dollar index is approaching 161 fib extension of the recent most bullish cycle, which is ongoing on the daily frame. Now if I zoom out, I will get to see some duplication levels here, and yes, based on the higher time frame confluence, this is the zone I'm looking at, so which comes around 114.38. Prior to that, it is anticipated that dollar index will find some resistance around 110.13, followed by 111.74. Now looking on daily time frame, the histogram is rising, MACD lines are rising, so no divergence in sight, which means that buyers are in full control. Now moving to 4-hourly. Now on 4-hourly time frame, I'll take the opportunity to apply the next fib extension. So using the lowest point of daily and applying the next fib extension by connecting the high and the next higher low, we get to see some more levels in between, more magnetic levels. So as I've explained in my previous weekly video, the first resistance is around 110. So this is the same level in sight. Though there is no sign of slowdown, MACD histogram and MACD lines, they are clearly rising. This is because of the alignment due to fundamental and technical reason. And the major support can be seen around 105.90 to 105.68. Moving down to hourly chart. Now only on the basis of hourly chart, I need to go back to 4H to find the last point on which I have applied the extension. So I'm going to mark a vertical line here, and it will help me to identify the point on 1H. Now yes, I got the starting point of 1 hourly chart. So I'll start my 1 hourly bullish count from the lowest point here. So I'll use a different color. I'll start from the lowest. First high and the higher low established on 1H, and let's mark it with blue lines. So based on the blue lines and the confluence of the red line, again I see that we have a very strong magnet zone around 110, and dollar index is not yet there, although I can see there is potential divergence building up on 1 hourly chart. Now in case if you see some retracement in dollar prior to reaching to the magnet zone, then we have strong support, confluence of support around 108.62, 108.37, and finally around 108.15. I'm going to use a rising trend line as well. So in case if we see some temporary pullback in dollar index, I believe it's going to be short-lived. Give me a second, I need to use a different color here. So I believe if we get to see pullback prior to reaching to this zone, then the pullback is going to be short-lived. A retest of the support, which has come due to multiple confluences of the fib lines and a rising trend line, and then it will march towards 110. Alternatively, it can directly rise towards 110 and then get into some short-term correction. But ultimately, dollar index remains stronger. And the next instrument I'll talk about is AUD versus Swiss franc. Now, in this case, I need to start from a higher time frame, that is monthly. And based on monthly, I'm just going to mark the major ABC levels in the bearish direction. Now, the chart is clearly bearish. So here we have the highest point, A, B, and this is our point C. So this helps in identification of ABC and application of first fib extension in the downward direction here. Now, since it's bearish, it's better to use red color. Now the second ABC on the same time frame is here, A, and this can be marked as our B, and this can be marked as C. I've skipped a couple of cycles in between, and here I'm going to extend it to second, A to B, and B to C. Now, did it form? Yes, it formed a magnetic zone here. So we have magnetic support on the monthly time frame coming around 0.4622 to 0.4661. If we take the average between the two, it will be the psychological round figure number of 0.45. So we have identified ABC patterns, multiple ABC patterns. So I'm moving a vertical line on the latest, and I'll get rid of the previous unwanted lines on the monthly frame. Now we can jump directly to daily here, and I will use the last vertical line which we have applied on monthly to start our bearish extension here. So I'll start extension from this high, I'll connect to the low and the next lower high, and I'm gonna zoom out here. So we have next extension starting from here, going all the way to this point, which is coming around 161, and then next lower high. So when I have applied my first extension, so this was wave 1 in the downward direction, this is second wave, the longest third wave, which usually travels toward 161 fib extension, and it happened. Then we got some correction here, and then the extension. So first wave, second wave, third wave, now this is fourth, and finally now we are in the fifth wave. So I can notice that the latest trigger point in the downward direction of the last wave comes here. The vertical line will help us to identify the trigger point of the last bearish wave. So here we have the level. So now the next formation is 1, 2, 3, fourth wave done, and now it is again fifth wave. So I'm applying Elliott wave count here. So here I'll be using fib extension in the downward direction starting from daily chart multiple times, which will help us to get the confluence of fib extensions. So first downward wave applied, and now I'm going to apply second with a different color here. Let's use blue here. So we have got some duplication of fib line, so this is an important resistance for the market now. Then we have another resistance here, and it should travel to the next level of support. So here we have upcoming support. Now, basis on monthly and weekly time frame, the long-term downside target is 0.45, but currently the price is around 0.5621, and it is resisting at this fib line. We have hidden bearish pattern here. We have lower lows pattern here. We have lower lows pattern on the price line. So I think it should continue, and it should move towards 0.5530 to 5510. So this should be taken as our nearest target, short-term target. Now I'll move to 4H, and here on the 4-hourly time frame, I can see the environment is totally bearish. Price pattern is lower highs and lower lows all around. I'm talking starting from this level. We have a high, we have lower high, and price is moving strongly in the downward direction. MACD histogram is also aligned in the bearish direction. So no signs against. If you want, we can mark resistance at this level as well. Now we can go to 1-hourly chart and find the setup. So here, based on 1-hourly time frame, we got higher highs with bearish divergence, and the sellers have completed the breakout structure, and sellers entered into the market. So this is the first wave down, second, and now we are in the third wave. So I'm gonna apply one fib extension last time on the hourly chart here. So this is the first wave down on 1 hourly chart. Now if I have to trade in the bearish direction, short position at the current price, stop loss around this level, which is the lower high, the first lower high established on 1 hourly chart, and I'm gonna target 5510 taken from the magnetic zones from the higher time frame. So our risk and reward is 1.78, which is quite decent. By taking risk of 50 pips, we'll be getting around 89 to 90 pips. So this is the setup for AUDCHF, short-term bearish, and I've explained the targets been on the basis of 1 hourly time frame. The next instrument is crude oil. I would like to start from monthly here, and I need to align the chart setup. Now I'm going to apply fib retracement between these points, so A to B. So I'm going to apply fib retracement here. So we reached exactly to the 50% retracement area, and crude oil found its support around 66.57. Moving to the next lower time frame, that is weekly. Now on the basis of weekly, I'm using lowest point A, B, C. So I'll apply my first fib extension. the target is way too high, 130. So let's leave it. It doesn't help much. Now I'm gonna zoom in, and once I have zoomed in, I have noticed that we got lower low formation with bullish divergence, and this is the breakout structure which is now established, which is now completed. And I have bullish histogram and one straight line in the bullish direction. So I cannot use my weekly pattern for applying ABC Fib extension. So I need to go down to the lower time frame, that is daily. Now on the basis of daily price pattern, the buyers entered in the green zone taken from the monthly time frame. So this is the lowest point A, this is the highest point B, and this is the lowest point C. So I'm going to apply new Fib extension on daily time frame here. A to B and B to C applied. Now we have a confluence of two Fib lines coming around this area. So this is going to be our nearest resistance zone. Currently, on the basis of daily time frame, price is rising without any damage, without any dent in the momentum, because MACD lines and MACD histogram both are rising strongly. I'm moving to 4H, and I need to bring a vertical line on the latest point connected here. So this is the latest vertical line which will help us to establish the new Fib extension on lower time frame. So this is the beginning of the new bullish wave on 4H. I'm going to use 4 hourly chart to apply new extension levels here. So first wave up and ABC pattern applied on 4 hourly chart. I just need to change the color of the Fib line, so let's use purple here. Now basis two strong lines, two strong Fib lines coming closer, this becomes our strong level of support. So in case we get to see some retracement, then crude oil should hold support from 74 to 74.4, and it should continue to complete its target around 78.5. Currently, there are no signs against MACD lines and MACD histogram in tandem with price. They are all marching upwards. Moving to the next lower time frame, again I need to shift the vertical line, which will help us to establish the 1 hourly wave count, ABC. So here we've got first wave up, second wave down, we've got third wave up, and now it's completing its fifth wave of the 1 hourly chart. So we can use Fib extension multiple times here. So I'll get rid of the previous extension lines. We have already marked the important zones of support and resistance, and here we go with first extension of 1H. First 1 hourly extension applied, and we are at 200% level. And now I'm going to apply the second extension. And we got the confluence of resistance here around this area. Strong resistance. So in the short term, on 1 hourly chart basis, we may find tough resistance around 76.9 to 77.12, and we can get some correction here, and it should find support around 74, and the resumption of bullish trend will take it to 78.5. Alternatively, if we do not get this retracement, because we have higher high pattern of MACD histogram along with MACD lines, so there is no bearish divergence, the buyers can directly take it to 78.5. Current price is 76.5, so I don't think so that we have the appropriate risk and reward to enter into the buy trade at the moment. Moving to 15 minutes. Now on 15 minutes, again we have higher high pattern of MACD lines and MACD histogram, but price has fallen below this major resistance zone by creating a false breakout, and now I think the buyers will find resistance at 76.9, which should push the price downwards lower towards 75.31, which is the first level of Fib, followed by 74, and if it so happens, then I should take this opportunity to buy and hold my trades until it reaches 78.5. So this is the plan for crude oil. Now, since dollar index is marching strongly in the bullish direction, then most of the dollar-based currency pairs, they are under tremendous bearish pressure. And Euro USD is also showing the same pattern. Now here, based on weekly time frame, I'm going to apply Fib extension in the downward direction. So this is, give me a second. So here we go. So here we have A, B, and C. Then we have second A, second B, and we have second C. So I'm going to apply Fib extension multiple times in the bearish direction, starting from the weekly time frame. So let's apply the first one here. Then the second one. And I can apply another one on the same time frame. So we've got confluence of multiple lines around this area, resistance. The second is here. Now since the price has broken below, so 1.048 will serve as strong resistance. No signs against. MACD lines and histogram, they are clearly bearish with good amount of bearish momentum, and the next Fib level is 161.8 and the price level is 1.00. So basically euro dollar is moving back towards parity. Sorry. And I'm moving to the daily frame, and I just need to put a vertical line at this level. That said, I can get rid of the previous levels. We can also mark a level here. Moving down to daily. Now on the daily frame, euro dollar is forming bearish pattern. Started here, we have lower highs, sequential lower highs again, sequential lower highs again, and we can apply multiple Fib extensions in the downward direction. No signs against because price is clearly moving down. MACD lines, MACD histogram, everything is moving down. No bullish divergence at the moment. So I can quickly use another extension here, the first one with a different color, maybe black here. So we've got strong confluence of resistance at 1.048 to 1.05, and the next target in sight is 1.0, that is equivalent to 1 parity. And if you want to trade, I think currently we are exactly in the middle, so it will give you 1-to-1 risk and reward, which doesn't make sense. We need to go down to lower time frame to find an optimized trading setup to optimize our risk and reward. On the basis of 4-hourly chart, I can see that it formed higher highs with bearish divergence here. Then the sellers entered into the zone, little push up, then it started marching downwards. We've got bullish divergence, but it failed because buyers could not break the structure and the sellers are in full control. MACD histogram, MACD lines, they are still clearly bearish. So I will not enter into a sell trade at the current price. I will wait for the bounce and then enter into a trade for optimizing the risk and reward ratio. I can use trend line here. So any push closer to the trend line, closer to the Fib, horizontal Fib resistance line should be taken as an opportunity to sell. Moving to 1-hourly chart. On the basis of 1-hourly chart, I can see that it all started with higher highs touching the trend line, with bearish divergence, and sellers broke the structure, and this is just a tiny pullback and continuation in the downward direction. Sellers might get exhausted because of the extended bearish run, because I can see some potential bullish divergence here. So my plan is not to buy due to divergence. My plan is to wait for the correction, let it go back to 1.0316 or maybe slightly higher, and I will take this opportunity to sell and aim for 1.0. Something similar would be noticed on 15 minutes, because on 15 minutes it is still printing lower lows, and there is no bullish divergence. So euro dollar clearly remains bearish to me. And finally, I'm talking about S&P 500. So based on weekly chart. Now here on the basis of weekly chart, I have found bearish divergence, weakness in the bullish momentum. I'm going to apply my first fib extension in the bullish direction to show you the target in the bullish direction, and it reached exactly to this level, very close to fib extension 200%, and now it has developed weakness and it is moving downwards. Going back to the line chart and moving quickly to daily chart. Now on the basis of daily chart, I can see that sellers are in control, because it is continuously printing lower highs and lower lows here. I will use a rising trend line as well to show that the bullish trend is broken. Come on, give me a second here. So the rising trend line is breached and sellers have entered into the market. I'm going to zoom in and apply fib extension in the downward direction, starting from the highest to the first low and connecting with the lower high. It has to be marked red since it's in the downward direction. Now looking at MACD histogram, clearly bearish. MACD lines are clearly bearish. Now let's zoom out and see if we find some magnetic levels. Yes, so the magnetic zone is around 5127. The current price is 5804. Intermediate levels are shown in between. So I'm not a great fan of shorting stock indices, because in the longer run they always bounce back, but if we have the opportunity to make some money in the bearish direction, I'll be quickly taking my profits at the defined fib extension levels. So these are the fib extensions in between where you should cash out quickly, get into a new trade, and ultimately you should hold your trades until it reaches 5127. So short-term plays in between the defined fib lines. Now currently we may get some bullish bounce around 1.618, because it's a strong fib level which should act as temporary support. Moving down to 4 hourly, I'm going to apply next fib extension, which will help us to identify the magnetic zones as well. And yes, on the basis of multiple fib extension lines, I can see that we have some magnetic zones in between. So this is a strong zone, followed by 5580. And even on the lower time frame, that is 4 hourly chart or maybe 1 hourly chart, MACD histogram is clearly bearish. So no signs against. The only thing is I'll be cautious and I can quickly take a short-term sell trade, collect my profit around magnetic zones, re-enter around the magnetic resistance zones, and look for the next nearest target zone. So this is the plan for upcoming week. I hope my analysis adds value to your trading plan and have a profitable trading week ahead. Take care and bye-bye.